I'm Dan Fitzpatrick at StockMarketMentor.com. Every day we watch the same shows, CNBC, Fast Money, Mad Money, and we want to use those ideas to make some money, okay? Well, good trading takes more than just hitting the buy button every morning on some of the stocks you saw on TV last night. I'm here to help you make some money on 3 stocks that I saw on TV. Today I want to start off with JBL. Okay, the company reported earnings. They missed them pretty badly, as you can see. The stock's down over 10%. The deal with this, like, they got the unhappy triad. They missed their earnings, they missed their revenues, and they guided downward. It doesn't, the only way it gets worse than that is if, like, all shareholders got E. coli or something like that. So the CEO said they've got reduced demand for mobility. Well, since that's kind of what they do, that's a problem. I don't want you to buy this dip. Now, the stock traded off of 19, so it's up a little bit off of the lows, but just stop and look at this for a minute. The stock did not even come close to this last high. Of course, few stocks have, but it hit the 200-day moving average just technically and couldn't stay above this level. This huge volume, this is institutional distribution. Okay, this isn't Billy Bob and Jethro deciding to sell their, 1,000 shares of stock. I mean, this is a huge volume today. It's basically all been to the downside. So with 1850 as potential support, I mean, here's my question. Why do you want to buy a stock that's under distribution that's at least 5% above where potential support is, and the stock's coming out of a volatility squeeze to the downside? So I just don't think there's a deal here for you. Just stay away. It's certainly the only momentum this stock has is up, down, and sideways, and that makes for a heartburn. Okay, Chipotle. Yesterday, I was mentioning it in our forum at Stock Market Mentor, and then I think I also mentioned it in our video, that if the stock fell back down to, say, 480, if it held above that level, it was probably going to be a pretty good trade. And it did hold, and it was a trade. Today, the stock gapped down a little bit from the close, and it's just kept going. The deal is, and this is important, again, just like JBL, only more so, this stock is in or has been in a volatility squeeze. The Bollinger Bands were about 7% wide. That's pretty tight. Compressed volatility. Now the stock is moving downward. Jefferies cut their price target from 490 to 390, right? Wrong. They cut it from 390 down to 350. So their price target had been down here. They dropped it all the way down to here. I don't know whether the stock's going to fall that far, and I like the food at Chipotle, but like I'm probably seem like the only one. The CFO said that they may lose 7% of their customers. They may not return. Okay, consider operating expenses are the same. That just basically eats into profit margins. I think this stock is going lower. I'm happy that they serve beer at their restaurants, but if I'm long in this stock right now, I'm going to feel like getting drunk. It's just not where you want to be. Now, XLV, they were talking about healthcare and biotech on Fast Money, and essentially saying, as I understood it, XLV is a better place to hide out than IBB. Okay, biotech is a part of the XLV, but this has really been taking it on the chin, whereas healthcare, they've got Pfizer and Johnson & Johnson, so it's a better place to be. Now, one of the guys on the desk mentioned that essentially funds, money managers are ditching this stuff because they want to be in the higher growth stuff. I think that's what you need to do too. If you're holding on to healthcare, it's probably some kind of asset allocation. Find a different allocation, because this isn't working. You don't, unless you're managing a couple $trillion, then you work for the Fed. But unless you're managing a couple $trillion, you don't need to have such a broad diversification in your assets. Sell your stuff here. It's crap. It's not working. These are all trending lower. Compare that to the XLK. Why do you think this is up while the XLV is down? It's because this is under distribution, This is under accumulation. You want to be in stuff that is above the 200-day moving average. Frankly, in this market, it's almost, and I mean almost, that simple. Not quite, but you want to get rid of stuff that's trading down like this. And this, definitely no place for you here unless it's an oversold bounce. So if you've got losers, just swallow your pride, sell them, get ready to move on. Okay, this is Dan Fitzpatrick at StockMarketMentor.com. I'll see you next time.